Welcome to Something More with Chris Boyd, certified financial planner practitioner and founder of Asset Management Resources, LLC, a registered investment advisor firm. We call it Something More because we like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients across the country, your host, J. Christopher Boyd.
All right, welcome to Something More with Chris Boyd. I'm Chris Boyd, certified financial planner practitioner, here with Jeff Perry, JD. We are
present.
There we go. We are both of Asset Management Resources, and thanks for being with us for Something More. As you know, it's a financial show. We like to talk about all kinds of topics related to not only what's important to make the dollar and cents issues, but what makes the money matters matter. So, with that in mind, we're going to talk some.
Never a shortage of topics, Mr. Boyd.
Absolutely. And, if you've been paying attention to the markets at all this year, last year was such a rough ride with markets going down, with the sharp interest rate hikes from the Fed and all the consequences that brought to investors, both of stocks and bonds. This year's been different in nature, but also quite active, quite volatile. And so start off first half of the year with some, happy news, kind of markets responding favorably, and sort of the pace of the Fed sort of tempering and tapering, and sort of seems to be wound down as far as what they're going to be doing for hikes. Who knows? We'll see one more possibility, I guess, this year, but seems like there's not much.
No way.
But there's been some data that we can talk about.
Yes.
And, this week's been a busy week in the markets as well, where things kind of jumped. But if you look at year to date, it's about halfway through the year we peaked, and then we started to decline.
Now climbing up again.
Yeah, over the last few weeks we've been coming back. So, in any case, Jeff, let's talk about some of the recent economic data and what implications that might have.
I have enough data here that would, that's my accent on purpose,
Yeah.
that would guarantee, if I read it all, we won't have any listeners.
we won't do that.
So the two key points numbers this week were the CPI and the PPI. So the consumer price index, which everyone's interested in who is concerned about inflation, excluding the volatile food and energy, right? So the core CPI rose 0.2%. And that was a forecast of 0.3%. So it was below expectations. And that's a positive thing, right? People, we've all gone through this period of high inflation, and not only as consumers has it affected us, but it's affected arguably some corporate profits, and certainly affected the Fed, who has been trying to get inflation under control. So that's a real positive thing. And the next day, PPI came out, the producer price index, and it declined 0.5% for the month. And that's the biggest monthly decline since April of 2020. And Wall Street was expecting a 0.1% increase. So arguably, PPI comes before CPI, right?
Yeah, and again, as you guys often say, one data point isn't a trend, but it does imply that the concerns about inflation are softening. That if anything, maybe that would imply we might see deflationary. Let's hopefully we don't have too much deflationary.
That's the worry, right?
That can be a problematic thing. It sounds like it should be good, but ends up not being good at all. So,
in addition to those inflationary data from the week, which everyone watches, jobless claims were up a bit for the week, 231,000, expecting 220. Not a big off, but still trending upward, right?
Yep, and also, that where the Fed has dual mandate of optimal employment and managing inflation,
right?
It also adds to the fuel to say, well, maybe there's not going to be a need for
more hikes,
another hike where if employment seems to be slowing.
That's right. And it seems to be the continuing claims number of 1.86 million is the highest it's been since November of 2021. So it's not jumping, like this isn't like a sudden increase, but it's just gradually increasing, right? And two other just kind of sentiment indicators. The Philadelphia Fed Manufacturing Index. So that's just a calculation of how industry is feeling. It's a sentiment indicator, right?
Yeah.
And that is a negative 5.9 as compared to the estimate of a 7.5. And in the same idea, home builders, they have a sentiment index also, and that fell to 34. And anything below 50 is considered negative. And home prices, according to this story that was on CNBC this week from the National Association of Home Builders, fell 6% last month.
What was it that fell 6%?
Home prices.
Home prices, yeah. Interesting. We seem to not be able to get away from real estate topics lately.
I know. So my theme with all this, without really, I mean, I have all this data here that's really deep and
extensive,
boring, but it's all in the same theme that home builders, manufacturers, consumers, everyone, prices are not going up. They're starting to temper. They're starting to go down in some areas.
Yeah.
And few more people are out of work. So it does appear that the economy is slowing, right?
It does. Yeah. So I think, and again, is that a good thing? Is that a bad thing? I think, ideally we don't want the economy to slow, right? We don't want to have a recession, and we seem to be, everyone's angling for this soft landing.
Yeah, that's the goal, right?
Yeah. So
that perfect landing of down from inflation, but not so far down we're in a recession.
Yeah. Yeah. So we'll see. I mean, it does seem like they're doing pretty adequate job of that, where you don't have you're starting to slow the growth, but not necessarily send us into a tailspin. But that's and I think it's also inevitable. Eventually, we're going to have a recession. That's just the nature of the way things work. The question is, will it be soon?
Yeah, well, you can predict a recession, and if your timeline is forever, you're going to be right.
You're eventually going to have one. That's what I'm driving at.
Lots of people were predicting it this year. We weren't. I remember an episode that we did, and if I had to put a title on it, I would say, "Where's the recession?" Because a lot of the talking heads were saying recession this year. But we had Brian Regan, our chief investment officer, on frequently, and he's data driven for everything he does.
Yeah,
and he wasn't seeing it either. So I don't know. None of us know if this is the early parts of the recession or not. Time will tell, but we'll see.
We'll see. All right. So there were other things that were newsworthy as well. And one of them was particularly a concern as it relates to the markets, and that related to whether or not we would have another government shutdown. Mm-hmm. And seems as though that worry has been delayed.
I noticed you didn't say eliminated.
Yeah, I mean, we had Michael Townsend on. Was it last week or whenever?
A couple weeks ago? Yeah,
not too long ago, and
yep.
He articulated it pretty well. As it relates to this issue, that it's probably an issue where we might get out of dealing with it right now, but it doesn't mean it's not going to be a problem in January or February, whenever. Do you recall how long we funded that? The government.
So the new Speaker Johnson, Speaker of the House, did something that I don't know if it's never been done or certainly hasn't been done in a while, but he split a couple of bills. Instead of just saying here's one continuing resolution, he split the topics a little bit to have cleaner votes and have hopefully a more thoughtful process. So one's in January and one's in February.
Do you recall how they were split up? Which parts?
I do not.
I don't really recall either, but yeah. So that'll be interesting because that may complicate it or may simplify it. I don't know. That's one of those challenging things. Sometimes when you have a more comprehensive approach, you've got more room for, well, I'll give you this if you give me that. On the other hand, part of the challenge that I think this speaker is particularly attuned to, and I think is becoming more of a concern for the public is the extent to which we are overspending as a government.
Right.
And there's no doubt that we have been for quite a long time, and it's a bipartisan affliction.
Absolutely.
But at the same time, I think it's a mistake to get short-sighted on the Ukraine issue. I know that's one of the areas where people think we're just spending money and where's the end, kind of thing. And I understand their concern, but I think it's a mistake to not keep Putin occupied in a sense and prevent the risk of aggressions in areas that might require U.S. Forces and
Sure.
so I'm inclined to be in favor of trying to continue that, but ultimately, I think that's part of the challenges of this: the whole funding Israel, funding Ukraine, and the challenges there, versus all kinds of other priorities, whether
There's no
it's
shortage of priorities, for
the
sure, right?
border, whether it's aspects of the economy, and it's a challenge. It's definitely a challenge. It's
So to be
when we talk about the budget, right?
right,
Excuse me. It is an increasing in amount that is needed for our dealing with our interest costs, right? As interest rates have been rising.
simple math.
Yeah, it's
More
very
deficits,
substantial.
more debt, higher
Yeah,
payment.
and when you look at certain parts of the budget as sort of being off limits, um, we will refer to as entitlements, um, Social Security, Medicare, Medicaid.
Right.
These are things that we don't really want to tinker with.
And other people would put other things in there, military spending, and
the military is always one that is
That's right.
an important consideration, which will
especially
bring us
now.
shortly to our next topic in a moment.
Mm.
But so there's a number of things that leaves you a very limited window
That's right.
of where you can try to draw down expenses, which leads you, honestly, Jeff. I mean, how's this going to get resolved? There's a limit to what you can do if you're not going to spend, and it's really going to mean nobody likes it, but if you're going to want to spend the way you spend, you got to pay, you got to charge more in taxes. So, and I think ideally you'd have some combination of reduced spending and, actually maybe we'd all just say reduced spending would be the ideal, but
Well, we would say reduce spending and growth in the economy.
there you go.
Right.
But the idea of a pragmatic resolution only comes with some combination of decreased expenses, increased revenue. I think that's probably the likelihood.
There was some efforts with two senators that are actually leaving the Senate, but still making an effort. Senator Manchin and Senator Romney trying to put together a commission. We had talked about this on previous episodes.
Yeah.
The old Simpson Bowles commission, and
right.
to try to come up with real solutions. And just like your household budget, if you're short in your budget, it's increase your income or reduce your expenses, and usually both, right? If you're trying to get things in order. So the bill that did pass the House and the Senate did not deal with the additional funding for Israel or Ukraine.
Yeah.
And the military, which is the military portion of the budgets, expires in January 19th. That has to do with military construction, veteran affairs, transportation, and the energy department. I looked it up when you were talking.
Yeah, that's fine. There you go.
And so that's January 19th. And the expectation is, at least from the talking heads on TVs and podcasts, is that that's when the issues of Israel and Ukraine will be handled, if not handled separately beforehand. Of course, Congress goes on a holiday break, and the other issues have a February 2nd deadline. So that'll be here before you know it. I mean,
it's coming fast. Yeah,
right.
And that's a challenge, I think. But maybe that's a good point to transition to Another major news item of the week was the meeting between Biden and China's leader, President Xi.
Yeah.
Uh,
Long time coming and definitely needed. Definitely, the tensions between the two countries are well known, right?
yeah, there were some good outcomes, I gather, that came out of that.
Yeah. I
Among
think
them, communication between our military, so that tries to lessen some of the tensions if there's an issue.
if
That we have.
nothing else came out than that, I would have said it was worth the effort, worth the visit, worth the
Yeah.
yeah.
Some people are focusing on some cooperation in dealing with the fentanyl troubles as another favorable outcome. I
If
don't
it's
know.
true. Yeah.
Is there anything else that you?
Those were the two substantive matters. I'm
Yeah.
skeptical of trusting anything that China says is true, but at least they're giving it lip service, and hopefully it's true. I mean, most of our fentanyl comes through Mexico, so it's not just a China problem.
The base materials or
The
whatever
raw materials, yeah,
sounds like it comes from China largely, or certainly in part, and then goes to Central America or whatever for South America. So I'm not sure where it starts, but
right.
for the pill production and all that.
I think
So
the
yeah,
biggest thing is that they met, and
yeah,
the military's talking, and they're talking about
some positive.
you're either a partnership or you're an adversary. So that was the headline that I saw come out of it from the Chinese president's perspective, and that is actually accurate. You
Yeah.
can't. There's not a middle ground here.
So that's generally a positive outcome, and
I think
fingers
so.
crossed that tensions start to diminish. But I do think there is the prolonged issue that there are aspects of which we are, in the greater scheme of things, going to be adversaries over the coming decades. The Taiwan issue seemed like tensions died down a little bit there as
Hmm.
well because of some election issues going on there, and I think the president clearly reiterated our position as it relates to our view on the Taiwan issue. So
I think the biggest issue dissuading China from moving towards Taiwan is what's happened to Russia and Ukraine, and how
yeah,
the world has stood up. And to your point earlier, I know we don't have time to get into it, but if that fell apart, if the support for Ukraine fell apart, that could change China's view on Taiwan.
yeah, yeah, yeah. Good point. Um, as we wind down, just a couple of minutes remaining, I saw an article in the Wall Street Journal, about the end of Mint.
And
And I
you
know,
don't mean it's on your pillow.
no, this is the budgeting app, Mint, that apparently it's going to shut down at the turn of the year, and which really kind of caught my eye because I think it's a very popular uh, application. This article is saying, somehow that applications that are good for you don't generally help you, don't make money because they, people are paying attention to their budget, don't necessarily spend money on things like an
It's like,
application.
who watches the news programs that say it's only good news, right?
Yeah, yeah. So anyway, I just I think that brings us to the idea of I thought just be set you up, Jeff, the
Mhm.
importance of budgeting and some of the challenges sometimes of doing that well. But there are other programs. We have some programs that can be of help to our clientele, and sometimes you do just need a little bit of help in getting focus and attention on some of these things to just be more intentional, and just that fact of trying to be intentional can really help you to have a better outcome. Again, this isn't everybody's focus or priority, but it's certainly an important ingredient. Money in, money out. It's arithmetic,
It
really,
is. It is. And Christmas is
fundamentally.
coming this year again.
Yeah.
Same day as last year. And
Yeah.
we talked about budgets and such during the holidays, but it's a good time to make sure your spending is in line with your income and your goals, things that are important to you, because this time of year they can get away from you.
Right. And it's easy to see how that can happen.
Hmm.
So, just uh, it wouldn't be worth starting Mint now, but at the same time, might be worth thinking about if you are using Mint, what's my alternative, and
There's
maybe you
several
want
on the market. Yeah.
and maybe you want to look to your planner if you use a firm like ours. We have tools that can be a resource to help
Absolutely.
in that effort to kind of track what am I spending. I say this all the time, and it's really, on one hand it's surprising, on one hand it's not. A lot of people just, if you're like this, you're not alone. Most people don't really know what they spend. If you're asked, how much do you spend a month? They don't really know. And that's okay.
And then when they guess, it's much lower than they do.
Than what they actually spend.
Right.
And that's okay. The point is, what you want to do is just from time to time, you need to step back, take account of these things so that you are holding yourself to the right standard. And ultimately, if you're being intentional, again, if you're spending money, you want to be doing it where you want it to go, not sort of just
your priorities, right?
Yeah.
Yep.
So in any case, speak to your financial planner for help in the process. And if we can be of help, certainly reach out to us. Jeff, thanks for good content this segment.
Thank you.
Everybody, until next time, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's financial planning, portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at amrfinancial.com or call us toll free at 866-771-8901 or send us your questions to radio@amrfinancial.com.